An AAVE price may have been impacted by this week's Curve Finance scandal, but a robust insurance fund and steady fee revenue could protect against further downside. AAVE, the governance token of the decentralized finance protocol, AAVE experienced a 17% decline between July 30 and August 1st, reaching the $62 level. And while the $62 support has demonstrated its resilience, the current price of $64.40 is still 12% below the daily close on July 30th. Investors are now questioning whether this movement signifies a more cautious approach to the sector, or if other factors are exerting pressure on the AAVE token price. Some part of the recent movement in the AAVE token can be attributed to the risks of cascading liquidations on DeFi protocols, resulting from the Curve Finance pool exploit that commenced on July 30th. However, AAVE's decentralized liquidity protocol has successfully survived previous identical scenarios, and the protocol has a substantial $295.6 million deposited in its safety module. Notably, Michael Egorov, the founder of Curve, currently holds a substantial $76.6 million loan backed by 357.3 million CRV tokens across 3 DeFi applications, as reported by Delphi Digital. This represents 40.5% of the entire CRV circulating supply and poses risks to the ecosystem, raising concerns about potential liquidation repercussions on major protocols, including AAVE. Having paid down some of his loans, Egorov has managed to significantly reduce his liquidation price points. Note on his Fraxlin position, utilization has fallen to 37%. So the APY should continue to decline, but according to Delphi Digital data, specifically on AAVE, Egorov holds 267 million CRV tokens, backing a 54.2 million Tether loan with a 55% liquidation threshold. The current liquidation prices for the CRV token stands at 37 cents, which appears relatively secure at the moment. However, it's essential to note that Egorov is paying a significant 50% APY for this loan. This situation serves as evidence that AAVE and other top DeFi protocols function as intended without special rules or bailouts, even for project founders. While the Curve token debacle continues, there's no distinct issue with the AAVE protocol aside from notable players taking assertive actions to close their positions. Another factor influencing AAVE's token performance is the stablecoin GHO, which has been trading below the $1 peg since its launch on July 16th. According to 21 Shares on-chain data and research analyst Tom Wan, the stablecoin's low fixed-rate borrowing presents a double-edged sword. The lack of DeFi integration and farming opportunities for GHO discourages borrowers from holding the token as they seek higher yields in other stablecoins. Tom Wan emphasizes that this selling pressure leads to the depegging of the GHO stablecoin on decentralized exchanges. The AAVE protocol currently boasts a substantial $5.1 billion in total value, locked across 6 chains, but it has experienced a recent 12.5% decline in this figure within just 1 week. In comparison, Uniswap's and Compound's TVL remained relatively stable at $3.75 billion and $2.23 million, respectively. However, it is worth noting that AAVE's annualized revenue is $12 million as per Defalama data, which falls significantly short of Convex Finance's $52 million and Radiant's $20 million. Despite this, some proponents argue that AAVE's higher fees compared to its competitors leave room for potential future revenue growth. And in May 2023, the older version of AAVE Protocol V2 encountered a bug that hindered users from withdrawing $110 million worth of assets on the Polygon network implementation. The issue arose due to an interest rate curve patch on May 16th, but it was promptly resolved within a week, and no funds were reported lost in this occurrence. Another recent contentious event on AAVE took place on June 12th, when a proposal was introduced to prevent a specific account belonging to Curve founder Michael Egorov from accumulating further debt. This move sparked debates among participants, with some contending that it infringed upon the principle of censorship resistance or neutrality in DeFi. And if despite the recent 17% decline in the AAVE token price and a 12.5% drop in TVL, AAVE's decentralized application remains a strong contender in the DeFi space. Robust insurance fund and protocol fees, the protocol is well equipped to weather market fluctuations and potential risks. Although AAVE's annualized revenue may be lower compared to some competitors, the higher fees could potentially pave the way for future revenue growth. Overall, AAVE's solid foundation and significant for 5 towns, injury or cleaner. We look for 610 over the 2A after ATEVs.